Hello, Scott Thomas here. Do you know there's only 5 ways to get money out of a life insurance policy? All 5 begin with the letter S. I will focus the majority of this discussion on the 5th way to get money out of a life insurance policy. The first way is sad. It's sad because someone we loved died and the death benefit is paid to beneficiaries or a trust. Number 2, it's the stupid way. It's not smart to waste resources. One of the worst ways to get money out of a life insurance policy is to buy a cash value and shortly later surrender it for cash. Early years especially have more cost. It's best not to buy a cash value policy unless you can afford to hold it for a longer period of time. A smart way. It depends on several factors, including your personal tax rate, the performance of the contract, crediting rates, loan rates, contract provisions. Taking money in the form of withdrawals and loans can be a very smart decision. The 4th way, sick. It's because you're sick you have access to the money before you die. It's deemed as critical care, terminal access or accident or illness spelled out in the contract. The Pension Protection Act changed the rules on this to allow access without paying taxes on early access to death benefits. There are riders, some are free, and some cost extra money, such as the true long-term care riders. 5th is the structured sale. It's one of the most overlooked ways to access money from life insurance, especially if you're older than 65. The structured sale has some requirements in general. You own the policy, you haven't assigned it in a loan to third parties. If it's term insurance, you're still within a conversion period, meaning that you can elect to change it from a term to a whole life or universal life without medicals. And that can also pay you money rather than just letting it lapse. So here's a glimpse into what that might look like. So this was a policy. The current cash value was $13,452. We shopped multiple offers, and the offer that came back to buy the policy was for $27,600, about twice as much money. So lastly, know that there is a structure to the structured buy. And there's a big difference in offers made and getting money out of life insurance. So you have a discovery or your initial look. You have some underwriting that may or may not require an exam. They're shopping that policy out and comparing those and then coming to a decision process. Very, very important. And you sign the documents and funds are transferred. So there is a big difference when you start to compare and shop these out. And so it's very important to have someone that works with you that's experienced that can help you work through that process. The reality is there might be a 6th way. And the 6th way is that, let's say your objectives change and you no longer need the death benefit, but you have a need for long-term care. So, financing home health care, assisted living, nursing. This does require that you would be healthy and that you would be able to answer some questions to be able to qualify and address that properly to make sure that the exchange is done correct so that there's not taxes. Whatever your choice is that, you have in your mind, it's a good idea to be informed so that at least you can steward the resources entrusted to each of us. We are uniquely positioned to help you sort out these types of issues and help you shop for the best offer or exchange. So if you'd like to reach me, I'm Scott Thomas, 407-644-9411, extension 2, or scott@stewardshipmatters.net. That's scott@stewardshipmatters.net if you'd like to contact me.